Hello everyone, welcome to Indian Economy by Aman Soni. In today's NewsHour, we will be discussing the important articles related to economy from the Hindu newspaper. In the page 1, there is no news related to economy, and even in the editorial page, there is no article related to economy today. You can skip directly to the world page. In Saturday's NewsHour, we were discussing about how the European Union was thinking of removing Russia from the SWIFT platform so that it could impose sanctions on Russia. And what is the SWIFT platform? There is a detailed article, we'll look into it. Again, in the MoneyWise page, you can skip this news. Same with this article. In the text and context, we have an explainer. Let's go through it. What is this? SWIFT. It is the Society for Worldwide Interbank Financial Telecommunication. So if we understand the name, we would get the concept. It is a network of various bank branches of different branches all over the world connected to each other. Let's take an example. Within India, in the domestic sector, we have the core banking software which connects all the branches of all the banks. So if we want to transfer amount to some other branch, what we would do? We would need the account number, then we would need the IFSC code of the particular branch. For example, if I have to transfer money from SBI branch of Delhi to say some other bank located in Hyderabad, we would need the account number of the person whom we are transferring the amount to, then the IFSC code of that particular recipient bank. Here the concept is same. Here we are transferring the amount within the nation. If I want to transfer the amount to someone located in New York having Citibank as their account, from my Delhi based SBI branch, I would need this person's account number and the SWIFT code of the particular bank. So every bank would have a SWIFT code, unique SWIFT code, and the branch also would have a unique code. So through this SWIFT platform, when I go to SBI, deposit the amount and give them the beneficiary details, through the SWIFT platform, they would put a message which would reach the New York branch of the Citibank, and the Citibank would transfer the amount into the beneficiary's account. Here we need to note that through the SWIFT platform, there is no transfer of money happening. It is just a telecommunication network. It is just a messaging network. So this is like saying, pick up the phone, call your friend and say, okay, you give the money to so and so person. The SWIFT platform does the same job. Here my bank puts a message to this particular branch, and this branch transfers the amount to my branch. Finally, the Citibank and the SBI would settle the differences based on by summing up all the transfers that they have done. To make the transfer ease and to make it faster, this is just a messaging service. Now let's go into the detail. So SWIFT is a network of all the branches of various international banks located in different parts of the world. And because it is a messaging service, it will lead for quick and faultless exchange of information related to the financial transactions. The headquarters of SWIFT is located in the Belgium, and currently almost 11,000 banking and security organizations are part of it. Here we need to note that not just the bank, even the other security organizations like the NBFCs, various stock markets, brokers, everyone would be registered on the SWIFT. So it is not just the banks. And each participant, say the SBI branch of Delhi, they would be assigned a unique code which would be ranging from 8 to 11 digits. For example, if it is SBI Delhi branch, the code would be something like SBI India, the branch and bank code, then it would be the country, IN for India, then it would be branch location for two digits, then the number would be there identifying the location of the branch. So the code would range from 8 digits to 11 digits. And because of these unique digits, my customer goes to the Delhi branch, deposits money there, and he gives the beneficiary details of this New York bank holder located in the New York. So the SBI person, he would just put a message in the SWIFT platform saying, okay, transfer this X and Y amount to the person in this Citibank with this particular SWIFT code. It is also called the banking identification code. So the Citibank would transfer the amount directly to the beneficiary. That is how the SWIFT platform works. Here we need to note that it's just a messaging platform and there is no actual transfer of money through the SWIFT platform. The banks would be settling the money later on, but here in the SWIFT, for ease of access and quick transfer, it is just a messaging platform. It provides a standardized format for communication. For example, there would be a format wherein if I open the SWIFT portal, they would ask the recipient's account number, the recipient's bank's SWIFT code, my details, the amount to be transferred, so that all the banks located in different parts of the nation would have a standard format for dealing and transferring, so that there won't be any confusions. Earlier there was a software called Telex, there the bank operators had to type in the information, and this was leading to a lot of confusion because when you type something, it is based on interpretation. It depends on how the receiver of the information would interpret. But what is different in the SWIFT platform is that it is a standardized platform. There would be a standard format, so it would be easy for everyone to understand and the scope for confusion would not be there. And why are the European nations saying and threatening Russia to exclude from the SWIFT platform? What would happen if Russia is removed from the SWIFT platform? As we have discussed, the SWIFT is used for settling amount, and if the Russian banks are removed from the SWIFT platform, the Russian banks won't be able to get payments from the other banks located in the different parts of the world. So this would affect the payment receiving ability of Russia, and overnight Russia can't come up with a system to replace this SWIFT because so many people are already there on the SWIFT, and Russia has to come up with something new in order to accept the payments, and it can't be done in a very short time. So in a short period of time, this would affect Russia and the Russian payments that Russia is supposed to receive. Was any country excluded from the SWIFT earlier? When USA had imposed sanctions on Iran for the nuclear deal, certain Iranian banks were removed from the SWIFT earlier. And in prelims, you can also get MCQs on the type of organization that SWIFT is. Here we need to know that it is an organization based on the shareholding of almost 3,500 firms located globally, and these firms would elect 25 members who function as the board of governors. This board of governors would manage the administration of the SWIFT, and it is also regulated by the G10 central banks, and it is overseen by the National Bank of Belgium. Because it is located in the Belgium, the Central Bank of Belgium would oversee the functions of it. And later on, along with the G10 countries, even the central banks of India, Australia and various other countries joined in managing the SWIFT platform. And what is the quantum of transactions that takes place on this platform? in 2021, on an average, around 42 million messages per day happened. So you can see the quantum of transactions that happen on the Swift platform for settling payments across the globe. And if Russia is removed from such system, it would affect the payment accepting capability of Russia. That's about Swift. It is a messaging platform and not payment accepting platform. It is owned by almost 3,500 firms and not by any particular single government. Those could be the important points for prelims MCQs. In the same explained page, we have another article related to Canada imposing digital services taxes. Recently, the Canadian government imposed a digital service tax of 3% on large companies that do business in Canada. And for that, they have defined certain criteria. That is, they should have at least $850 million of revenue and a profit of at least $16 million. So these are very large companies. And the United States Trade Representative Office is against this decision of Canada because it would affect the large MNCs of USA. And there is always a debate about how to tax the countries, the MNCs which have businesses in multiple places all over the country, all over the world. Because if a company is situated within a particular country, only the domestic laws related to taxation would be applied to the country. But if a company is located in various countries, there would be so many laws, and so many laws would be in conflict with each other. And what is the amount of tax that a particular government gets? All this would lead to confusions and conflicts. And here we need to discuss the concept of base erosion and profit shifting. What is base erosion and profit shifting? When we talk of tax, we talk of the tax base. That is, to take an example, when it comes to individuals in India, the tax base would be people earning more than 5 lakh per annum, because till 5 lakh there is an exemption of income tax. So all those people who come under the tax bracket are called the tax base. So if an MNC is earning so and so profit, it would come under the tax base because it is the base on which the income tax is applied or the corporate tax is applied. And here, base erosion and profit shifting. That means you are removing the tax base from that particular place and you are shifting it to some other place. You are shifting the profit to avoid the taxes. For example, if a company, MNC company in India, it does business in India, but it feels that the Indian tax rates, say 25%, is too high. So it would want to show the profits not in India, but it would in the books shift the profit to some other country like Maldives, a tax haven where the tax rate would be very minimal, or say 1%. Now what the company would do, it would have a subsidiary company in India called XYZ India Limited, and the holding company would be registered in Maldives. This would generally be a shell company because the operations are happening within India, and after every year after the business, they say that we have to provide dividends and profits to our holding company, and they would shift the amount to Maldives. And because of the double taxation avoidance agreement between India and Maldives, the taxes could be taxed only in one place. So the countries take advantage of it, and instead of paying 25% tax within India, the countries pay just 1% tax in Maldives. Here, the loss is for the Indian government because the majority of the transactions, that is the economic activities, take place within India. It is because of the business in India that the company is getting revenue and the profits. But the company is shifting the profit to some other country from my domestic country, and it is paying taxes there. In ideal situation, all of us should get a share of some profit. but here I am losing the tax. So this is the thing done by the MNCs for avoiding taxes. They shift the base, they take the profits away to tax havens and countries where the profits are less or no profits, there are no taxes. And in order to avoid this, every country tried to do something. Previously, there was something called GAFA tax imposed by France. GAFA is nothing but a digital tax on the companies called Google, Apple, Facebook, and Amazon. Same, the huge MNCs who would take back the profits to United States from the businesses in France. Here in this case, if these companies do the business in India, but they take back their profits to USA, to the home country, USA would get benefited even though the economic activity, the significant economic presence is not there in USA, still USA is getting taxes. But here it is the country where the offices are located, it is the France, it is India. These are the countries that are losing on the tax. So previously France had proposed the GAFA tax on the MNCs. And even in India, in 2016 we had something called Equalization Levy imposed by the government. What is Equalization Levy? This, these MNCs, they get advertisement revenue. So take example of Google. If Google, which is registered in USA, gets advertisement revenue from India. So earlier it was never used to pay tax within India because Google used to say that, see, my company is not located in India. I'm just earning advertisement from the digital transactions. So India was losing on the tax revenue. Then India made some rules saying that if the IP address is used is Indian, if the target customer is in India and he uses the Indian IP address, so basically it is like the business is happening within India. So in that case, the person whom the Google does the deal with, that person has to deduct the tax before making payment to Google, the advertisement revenue, and he has to pay the tax to the government. This particular tax on the ad revenues that were earned within the country, that was supposed to be deducted by the payer to the Google, instead of paying directly, had to pay to the government. This particular tax was called Equalization Levy. So here we can understand that every country would want to protect its sovereignty on imposing taxes. It wants a fair share of taxes for itself. So every country did take some measures for making this base erosion profit shifting avoidance. So India was talking about Equalization Levy and it imposed it. France was talking about GAFA tax. Now Canada is imposing a digital tax, which is similar to the same concept. It is just the difference in the name, but the concept is the same. So these MNCs like Facebook, Apple and Google, they have significant economic presence. That is, they do huge business within those countries, but they don't pay that much taxes within these countries and they shift those taxes to either USA or to tax shelters such as Ireland. And all the governments wanted a pie of the taxes. They wanted a fair share of the taxes out of these profits. For that, they made an agreement. In the OECD, last year, almost 136 countries met and they decided that we have to do something about these companies who do business within our country, but they don't pay that much taxes within our country. So for that, we have to impose a minimum corporate tax on them so that every country would get a fair share of taxes. So those countries decided to have a minimum corporate tax of 15% on all the companies. And this, under the same G20 base erosion and profit shifting project, the MNCs would have to pay certain tax to the governments, the foreign governments in which the business is located. For example, here in this case, they can't escape but pay tax to India, China, France, Canada, etc. And companies will have to allocate 25% of their residual profits for calculating that particular tax, and this residual profit would be calculated based on that which is 10% more than their revenue. So if Google earns amount, and whatever amount which is more than the profit, which is more than the 10% of their revenue, from that particular amount they have to put aside 25% for calculation of the taxes. So this is just a mechanism to ensure that every country would get some fair share of taxes for the business that is happening within their domestic borders. And here what used to happen, in order to attract the countries into their countries, the tax havens would provide almost very minimal taxes and no taxes. And because of this, there used to be competition between governments to provide less and less tax rates, so that the countries would shift the headquarters to their countries. And because of this competition between all the governments, everyone was losing on the tax. There is a quote saying that between the fight of two people, the third person would get benefited. Just like that, between the fights of governments for getting the tax revenue by imposing less tax, say even a 1% tax on so many billions would be much more than imposing 15% tax on, say, less amount, the trade in which that happens in that particular amount. So in the tax haven, if even if they impose 1% tax, if the MNC shifts all the profits of all the countries into that tax haven, even a 1% tax on that particular amount would be a huge sum. So governments were competing for giving less and less tax rates, and because of this, everyone was losing. Only the MNCs were getting benefited. So finally, the G20 countries under the aegis of OECD, they came together and came up with this minimum corporate tax pact. But currently, it is still in the discussion stage and it is not yet active. So Canada has said that if the BEPS framework is implemented by 2023, then it's fine. We will go for it. But if it is not implemented, then from 2024, these companies will have to pay the digital service tax, and for all the profits, even which are getting accumulated during 2022. So the digital tax that is being imposed by Canada is now nothing but, if the minimum corporate tax under the OECD doesn't come into force, they are imposing their own particular tax on the MNC companies. And for this, the UN government is saying that you have to wait for the BEPS agreement to come into force, and a country should not unilaterally impose tax, and this is against the collective agreement that everyone came together. That's about this article. We have some concepts related to base erosion, profit shifting, GAFA tax, equalization levy. Hope they were all clear. And you can skip this article. Those are the articles related to economy today. Thank you so much.